I still remember the listing day of Bajaj Housing Finance. It was one of the hottest IPO during that time. Company got listed on 16 September 2024. And man, what a crazy listing it was. Its IPO price was 70 rupee and company received stellar response with 67 times subscription. As a result, its stock got listed at 150 rupee at 114% premium on the first day itself. For the next few days, its stock continued to go up to touch a high of 188 rupee. However, since then, it's been nearly 16-17 months and its stock price has fallen 50% from its peak to current levels of around 93. I still remember sharing a tweet where I clearly said that buying it post-listing could be disastrous. Anyways, today Bajaj Housing Finance has more than 24 lakh shareholders and many of them would be totally confused. Why has the stock fallen so hard? Is there any fundamental problem with the company? What is the expectation from Bajaj Housing Finance in the future? Are current valuations fair after 50% correction? And finally, what should investors do? So in this video, we'll try to decode all the key questions around Bajaj Housing Finance. Alright, let's get started. At the time of its listing, one of the biggest narrative for Bajaj Housing Finance was it is not just another housing finance company. It is part of Bajaj Finance Group. Now, Bajaj Finance is India's largest NBFC and has a reputation of one of the biggest wealth creator in last 15-20 years. Those who missed the wealth creation opportunity with Bajaj Finance wanted to participate in another such story. Second, the timing of IPO narrative worked in its favor. When the IPO came, housing finance was being pitched as a long-term structural story in India. It is a long-term story, but at that time, affordable housing, rising urbanization, government incentive, and formalization of credit were all strong themes. Also, housing loans are relatively safer as compared to your unsecured lending. And a well-run housing finance company could scale up a lot without taking excessive risk. Bajaj Housing Finance completely fit into this narrative. On top of this, Bajaj Housing Finance itself had a great track record. Between 22 to 24, company was able to grow its AUM, that is asset under management, at 30.9% CAGR rate. And company's asset quality was top-notch. Further, Bajaj Housing was focused on prime loans to low-risk customer. For instance, its home loan division contributed around 58% of its AUM, that included 87% salaried customer. And 75% of its home loan customers have a CIBIL score of more than 750. The next factor was reasonable valuation. At IPO price of 70 rupee, Bajaj Housing Finance commanded a price to book of 3.2. Now, for a company that has Bajaj brand name and distribution, then top quality business with strong growth potential, it was a reasonable valuation. And of course, during September 24, we are at the peak of bull run. Everyone was running behind listing gains and every other company was getting listed at high valuation. So all stars were aligned for an extraordinary listing of Bajaj Housing Finance. Brand trust, structural housing finance story, clean balance sheet, then scarcity value and bullish growth expectation, along with short-term listing gain psychology. But the problem is that IPO optimism resulted in crazy jump in listing day itself that already discounted a lot of future growth. Post-listing, its price to book was at more than 6, which was certainly not sustainable. And then reality hit. In the first few days, prices kept moving up largely because of momentum, along with limited free float and IPO euphoria. But once the dust settled, the market started asking a basic question. How much growth is already priced into the valuation? Please note that when a stock is valued for perfection, even good execution is sometimes not enough to sustain the price. Also, market sentiment changed a lot since September 24. Liquidity got dried up and people started booking profit. Then second issue with Bajaj Housing Finance was the supply that was coming into the stock. Post-listing, promoter holding was very high and public float was very low. But over time, market understood that Bajaj Finance would need to gradually reduce its stake to meet the SEBI's minimum public shareholding norms of 25% stake. And guess what? The first promoter selling came in December 25 when Bajaj Finance sold 16.6 lakh shares at 95 rupee. The problem is that even after the selling, Bajaj Housing still owns around 86% stake in the company. And it has to further reduce stake to 75% over the next few years. It means the supply issue will continue to be there. Then another challenge was the broader macro environment turned unfavorable. Interest rates stayed higher for longer, global liquidity tightened and risk appetite reduced. And financial stocks, especially NBFC and housing finance companies, they tend to underperform in such phases because their profitability is sensitive to funding cost and credit cycle. All these factors led to massive valuation derating in housing finance company, including Bajaj Housing. Its stock did not crash in a single month or quarter. It corrected over a time due to optimism fading away, supply concern emerging, and broader market mood started weakening. From the peak, the stock ended up correcting close to 50%. However, it was more of removing the excess froth from valuation rather than rejecting the business itself. And this brings us to the most important question. Is Bajaj Housing Finance fundamentally weak, or was it just priced too optimistically at listing? So if you look at the business itself, there's no evidence of fundamental weakness. Bajaj Housing Finance is actually a well-run, conservative housing finance company. Its loan book is largely focused on home loan with a meaningful mix of salaried customer and relatively low risk profile. Asset quality has remained stable with gross NPA and net NPA numbers under control. This is again very important because housing finance is a long duration business. If asset quality goes wrong, problems don't show up immediately. Now on the liability side, company benefits significantly from its parentage. Being part of Bajaj ecosystem, it gives them the access to diversified funding source at competitive rate. While housing finance spreads are thinner than unsecured lending, Bajaj Housing has managed to protect margin reasonably well. Please note that Bajaj Housing Finance may not earn flashy ROEs like Bajaj Finance, but that's also because the risk profile is very different and far more stable. Growth-wise, the company is scaling steadily. Loan growth has been healthy but not aggressive enough to raise the red flags. This is actually a positive sign in current environment where investors are cautious of lenders that are chasing growth at the cost of poor credit underwriting. Bajaj Housing Finance is clearly prioritizing sustainability over short-term gains. So if the fundamentals are largely intact, then what went really wrong? The answer is simple. Expectations were too high at the time of listing. The IPO and post-listing rally priced Bajaj Housing Finance as if it would compound at an extraordinary rate for many years, almost like a consumer NBFC. But housing finance does not work like that. It's a lower risk, lower margin and more competitive business. Once the market understood this reality, the stock corrected, even though the business continued to perform reasonably well. So in short, Bajaj Housing is not a broken business. It is a case where prices ran far ahead of fundamentals and now the stock is paying the price for that early optimism. The next logical question, and probably the most important one for investor today, is after a 50% correction, is the valuation now reasonable and what could be a sensible entry zone? So here first thing we need to understand is there is no perfect entry price, especially in financial stocks. What matters more is whether valuations have moved from optimism to a reasonable level. For housing finance companies, the market usually value them on price to book rather than price to earning. That's because lending businesses are balance sheet driven. At the peak, Bajaj Housing Finance was trading at a very aggressive price to book of more than 6. That premium assumed flawless execution and very high growth for many years. But after 50% correction, the stock has already gone through a meaningful derating. Now the valuation is closer to what you would call a quality housing finance company premium, not a hype-driven premium. But here please note that in spite of this correction, the current price to book of Bajaj Housing is still higher than the IPO price to book. So practically, this is what I think, that if Bajaj Housing Finance is trading at very high price to book multiple, like 5, 6 and above, you are basically paying upfront for many years of growth. That leaves little margin of safety. If company has moderate premium to book, like 3 to 4, then you are paying for quality, brand and balance sheet strength, which is fair. But if the valuation are closer to long-term housing finance companies average, like between let's say 2.5 to 3.5, that's when the risk reward becomes more favorable for long-term investors. So instead of obsessing over exact numbers, the better approach is phased accumulation. This is not a stock you buy aggressively in one shot. This is a business where you build exposure slowly, especially because more public float will come into the market over time as promoter would need to reduce stake. That supply can keep the stock range bound for a long while, even if the fundamentals remain intact. Then another important point is, don't expect Bajaj Housing Finance to behave like Bajaj Finance. This is not a 40%, 50% kind of growth company or an explosive ROE story. While Bajaj Finance command a supreme ROE of 19-20%, Bajaj Housing is a steady, compounding and a low risk housing finance business with a current ROE of 13.5%. So if you go with reasonable expectation, you won't be disappointed. So overall, if we conclude, the sharp fall in Bajaj Housing Finance was purely valuation correction, not business breakdown. Fundamentals remain largely intact and conservative. Valuations today are far more reasonable, though not dirt cheap. So here the best strategy would be gradual accumulation, not lump sum chasing. Returns will likely be steady, not extraordinary. And this actually brings us to a full circle of a bigger investing lesson, that great businesses can be bad investment at wrong price. Now you tell me in the comment, is it a good time to accumulate Bajaj Housing Finance, or there can be more pain ahead? If you find this video useful, do share it within your circle. I'll see you next video. Till then, take care.